Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. This week, I want to talk about how it really is the government's fault. It is. It's true. Back before the market crashed in 1929, businesses kept their financials in a way that made sense for them to be able to make business decisions, and to be able to run their companies. That all went out when the market crashed. Because the problem was an investor couldn't look at the financials from one company and compare them to another and be able to understand what was going on because the financials were always so different, right? And so bad investments ended up being a huge contributing factor to the market crashing in 1929. So as a result of the market crashing and the Great Depression, the government formed the entity called the SEC, the Securities and Exchange Commission. And the Securities and Exchange Commission put together a list of standardized financial reports. That's where we got the profit and loss, the balance sheet, and the cash flow, the statement of cash flows from. Those three basic reports. Along with creating those three basic reports, they also came up with a long list of rules. Those rules are referred to as GAAP, or Generally Accepted Accounting Principles. That is the sandbox that your accountant plays in. They are very restricted on what they can call income, what they can call an asset, and so on and so forth, right? So because of that, today we have these financials that are great for banks. They're great for investors. They're mandatory for the IRS and other government entities. But we've gotten away from financials that help us to understand our business and be able to make good accounting decisions and good business decisions based on numbers. And so one of my big goals is to help people be able to understand their financials and to be able to use them to be able to make money. So back when I had my own company, I knew about the profit and loss. Everybody knew about the profit and loss, right? That's a very common financial statement. But what does a profit and loss mean to you? And do you prepare it monthly? And do you review it when it's prepared monthly? Chances are you go in and you look at your revenue, because that's the, beat your chest number. This is how much I sold, right? Everybody's really focused on revenue. And then you might look at gross profit, but it probably doesn't mean a whole lot to you. And then you go straight to the bottom line, the net profit. You want to know how much money you actually made that month, right? That's what most business owners are doing with their profit and loss. And then there's the balance sheet. I had no clue what a balance sheet was when I owned my landscape and construction business. In fact, I went in to get a loan, an SBA loan from the bank. And they said, okay, you need your profit and loss. And I was like, okay, here's my profit and loss. And they said, now you need your balance sheet. And I was like, I no clue what a balance sheet is. I looked it over and it had assets, liabilities, and equity. And assets to me were kind of what you own, which is true. And liabilities is kind of what you owe, which is also true. But then you have this equity number, and I didn't know what the heck equity was. I knew what equity was in my house, but did I really have equity like that in my business? I didn't know. It didn't really make much sense to me. And so I really struggled with those. So what we have done with Foundation Accounting and Consulting is we have created some simplified methods to help understand your financials and to be able to change them a little bit so that you can understand better what's going on with your money. To do this, we use M&Ms, right? It's so much easier to use M&Ms and to have that visual rather than to use numbers. Because let's face it, a lot of us looking at numbers, we just don't make any sense of them. It doesn't make much sense when you just look at those numbers to try and figure out what it means. I personally have to see charts and graphs. I have to see comparisons. I have to see ratios, things like that to help me be able to understand my numbers. And so we use M&Ms to help to explain everything, right? To make it simple. So a lot of people, when they eat their M&Ms, they'll open them up and dump them out. And then you sort them by color, right? So now you have all the different colors separated. You have your green, you have your blue, your red, your yellow, your orange, and then brown. And they're all separated into their own little groups. Well, doing that is the exact same as bookkeeping. That's what your bookkeeper or accountant does when they are doing your bookkeeping and preparing your financials. Those are the set piles that the government and the banks and everybody want to see your transactions separated into, right? So that helps us be able to keep to those generally accepted accounting principles, or GAAP. And that is where most accountants stay. They stay right there in that little realm with their M&Ms nice and neatly sorted into different colors. The sad thing is that doesn't really help us understand much what's going on with our business. So what we do is we assign each one of those colors to a different category, and we help to be able to take each of those categories and group them together so that we can make sense of things, right? So typically what we do is we take and we separate out the green M&Ms and put them aside. And then we have red, yellow, blue, and orange that we put all together. And then we have the brown M&Ms that we put all together. So we end up with just 3 groups. And 3 groups is much easier to understand than the 5 groups or the 6 groups that they have, the different M&M colors, right? So the first category is the green M&Ms. The green M&Ms represent revenue. That's the money coming into your business, right? Obviously, money is green here in the United States, so the green ones match because of that. But the real reason that I chose the green M&Ms to be the revenue, to be the ones that we focus on and are super excited about, is because of a commercial, an M&M's commercial back in the 80s. And I don't remember the exact words, but it was 2 boys at a Little League baseball game. And the one boy is on deck, and the kid in the hole comes over to the kid on deck and he says, man, you've been doing awesome with your batting this year. You got to tell me your secret. Help me out. So the kid dumps out a package of M&Ms into his hand and shows him the M&Ms. And then starts to explain that, well, when I want a single, I eat one of these. When I want a double, I eat one of these M&Ms. When I want a triple, I eat one of these. And when I want a home run, I eat a green one. So the green ones were for home runs. So anyway, he ends up sharing a triple with the kid who goes up to bat and saves the last green home run for himself. And so that is the reason that I like to represent the revenue as the green M&Ms. If we go back to our three separate groups, we have three different groups of M&Ms, right? We have the green, then we have the red, yellow, blue, and orange, and then we have the brown. And when I'm demonstrating this, usually play a game with people. I have them dump out their M&Ms, right? And then you have to match up one green M&M with each one of the other M&Ms. And usually you run out of green M&Ms early, right? Because it's very odd to get a package with a whole bunch of green M&Ms and not very many of the others. But that kind of illustrates the point that your revenue, each dollar that comes in, has a job and has to be matched up with each of those other M&Ms, all of the costs and expenses for your business, right? So if you're bringing in enough green M&Ms, you can cover all of those costs and expenses and have some left over. And the green M&Ms that are left over at the end, that's your profit. That's what you have left. So that's kind of a quick explanation of why your accountant uses the rules that they use, which we have to, obviously, like I said, for banks, for investors, for the IRS, those kind of things. We have to follow those rules for those situations. But when it comes to making decisions about your business and helping your business to grow and to be able to protect your cash flow, you really have to look at it in a little bit of a different way to help you be able to understand what's going on with your company. So that is the reason that we focus on green M&Ms. So thank you very much, and I'll talk to you next time. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.